Friends, I'm live. Let me check it in my phone also. Yes, friends, I'm back. Can you all see me? Hello, Deepika. Let others also join in. Good evening, Katiravan. Not good evening here. Good morning, Katiravan, Brinda, Swapna Rakesh. Good morning, everyone. Let them join in. All right. So I believe we were somewhere over here and we did with question number 8. Now we'll go to question number 9. Okay, shall we start off? Question number 9 is a very simple question, friends. Okay. Mr. Maman is an Indian investor who's investing in a listed bond in USA. Earlier question, the US fellow was investing in India. In this question, the Indian fellow is investing where? In USA. And he says the price of the bond is $100. So I'll write down working note number 1. Basic data. Okay. Price of the bond, I'll call it as P0. $100. All right. Point number 2, they have told the closing price P1 is going to be $103. And they have talked about dividend, not the dividend. The coupon is going to be $3. All right. So friends, from this, can I find out the return in dollars? Formula would be 103 minus 100, P1 minus P0 plus D1 divided by P0. Do I get the answer as 6%? Can you write down till here in your books now? I believe you're all done writing this, friends. Now, here I have got the return in dollars. But the problem is the investor is actually from where? The investor is coming from India, right? Now, hold on. Is everyone comfortable? Can you all see me clearly? I believe yes, everything is comfortable and clear is what I understand. Let me continue now. All right. So, friends, what has happened is being an Indian investor, I should have some spot Indian exchange rate. In this question, they have not provided an exchange rate that is creating some confusion. So, when USD is flat, there is no problem at all. But if USD is appreciating, we will have a small confusion. So, what I will do is we will make some assumptions over here. We'll write down point number E. It is assumed that spot rupee per dollar rate is, shall we take it as 70 rupees per dollar? I think that's approximately the right number, right? What is the current exchange rate? Let's go and check it. INR USD. $1 is 76. You want to take 70 or you want to take 75? We can take anything. We'll keep it at 70. It will be easier for us to understand. Or if you want, we can make it 75 rupees per dollar also. Fine, let's keep it at 70 rupees per dollar. So now I'll write down over here the next working note. If USD is flat. So friends, if USD is flat, my P0 would be $100 into 70. That would turn out to be 7,000 rupees. All right. My P1 would be $103 into 70, no change. And my coupon will also be $3 into 70. So I think I'll get the answer as 103 into 70 would be 7210, and 3 into this thing would be 210. Therefore, my return would turn out to be 7210 minus 7,000 plus 210 whole divided by 7,000. You do this and see, you would get the same answer what you got earlier. Yes, you will get the same 6%. Can you write down this in your books now? Maria, yes, you can assume any rate like this in the exam. In fact, the study material has solved it in a way that the rates are not given at all, but they have still solved it. But that doesn't make it logical. You don't understand what you're doing. That makes it complicated. Once you assume a rate, then your answer is clean. You don't have to worry at all about anything. And when there is no information given, we have the right to assume. That is always one of the rights we have in the examination hall. I believe you are all done with the first one. Now we go to the second one. USD appreciates by 3%. Wonderful. So now what will happen? I'll write down. Next working note. USD appreciates by 3%. What this means is that if right now it is 70 rupees per dollar, this is going to go up by how much now? 3%. So you get the answer as 72.1 rupees per dollar. Okay. So now what would happen is your P0 would remain at 7,000. Correct. That will not change. Your investment will be the same. But your price one would be $103 into 72.1. And your coupon would be $3 into 72.1. Can you write down this and tell me what is the return that you get over here? I'll give you a minute's time. Once you get the answer, put it in the chat box. All right. Excellent. 9.18%. That is the right answer. If you go through the RTP also, they have done it in a different style altogether, but they get exactly the same answer. All right. But this is more logical. You understand what you're doing. So that way there is less chance of going wrong in the examination hall. I believe everybody is clear with this point. Shall I go to the next one now? Next one is rupee depreciates by 3%. That would mean it will be 70 rupees per dollar, which is right now, it will fall down by 3%. You would get the answer as 67.9 rupees per dollar. Now what will happen? Your P0 will remain the same. Your P1 would be $103 into 67.9. and your D1 will also be this. Write down this and tell me what returns you get over here now. Yes, Suraj, because I'm in India, I will look at my returns in India, right? Do you get the answer as 3%, Darshana? Is everybody getting the same answer? No, it's actually 2.82, Darshana. Can you please confirm? Yes, 2.82 is the right answer. The total you would get it as 7197.4 divided by 7 is 2.82%. Yes. Okay. Fine. Everybody got this answer in your books? All right. Last one. They have told Indian rupee appreciates by 5%. Friends, here your RTP answer is not correct. I'll give you the answer as per RTP also, and I'll give you the correct answer also. So I'll just give a heading first. Solution by RTP. Okay. Friends, let me ask you one question. I don't mind waiting for 10 seconds over here for your reply. If rupee appreciates by 5%, does it mean dollar depreciates exactly by 5%? Yes or no? No, if rupee is appreciating by 5, dollar will be depreciating by some other number. It will not be exactly the 5. In fact, in the previous problem that we worked out, you yourself saw one was 0.0611, other one was 0.0615 something percentage, right? RTP has assumed that if rupee appreciates by 5%, dollar will depreciate by 5%. That is their assumption. Therefore, the revised rate, what you would get would be 70 rupees minus 5% per dollar minus 5%. So that way you get the number as 66.5 rupees per dollar. So now the return would be $106. That is $3 coupon and $103, 100, that is the closing value into 66.5 minus 7,000 whole divided by 7,000. You get the answer as 0.70%. This is the answer as per RTP, but this answer is incorrect because they have taken a wrong assumption that both are going to appreciate and depreciate at the same rate. I will give you the correct answer once you do this. Darshana, I have taken 106. That's 103 of repayment value plus $3 of coupon also I have included in one shot. I just took a shortcut method. Are you all done writing this, friends? Perfect. I believe everybody is done writing this. Now I will give you the correct solution. Okay, I'll go by step number one. I need to first find out the rate of, when rupee is depreciating, right? Rate of depreciation of dollar. Rupee is appreciating. Rate of depreciation of dollar. Look, what is the spot rate that I have taken over here? Is it 70 rupees per dollar? We always focus on the commodity. So in order to determine what is going to be the appreciation of rupee, what I will do is I have to convert this into dollar bar rupee, so that now rupee becomes a commodity. So I'll do 1 divided by 70. I'll get 0.014287 dollar bar rupee. Now what I will do, I will add 5 percentage. So when I add 5 percentage to this, I'll get the answer as 0.014999999 dollar bar rupee. So now here what did I do? I did rupee appreciate by how much percentage? 5 percentage. Now what I will do? I will reconvert it back into what? Rupee per dollar. So what I will do? 1 divided by this. I'll get the answer as 66.66 rupees per dollar is the answer what I will get. So if I want to know the rate of depreciation of dollar, the formula would be 66 minus 70 divided by 70. It actually turns out to be 4.76 percentage will be the depreciation of dollar if rupee is appreciating by 5 percentage. This is the one mistake that has been done in the RTP. Katiravan, I think I elaborated that $106 is $3 of coupon and $103 of redemption value. So once I get this, step number 2 will be return. Here I'll write down P0 will be 7,000. P1 will be $103 into 66.66. Coupon will turn out to be how much? $3 into 66.66. And hence the real return that you will get would be it should be 0.95 something percentage. But earlier we got the answer as 0.7%. Just do this. Please write down this in your books now. Yatishwar, I'll explain that. Did I give you time to write down this? I think I did not give you time to write down this, right? First you write down this in your books, then I'll explain to you. Brinda, now how to do in the exam is a tricky question. All right, because the RTP has done it assuming that the appreciation depreciation is right. But ideally, this is the correct solution that you are supposed to give from the exam perspective. I wish the RTP would have done it correctly. Then the confusion wouldn't have come. Are you all done writing this, friends? Let others also finish. I don't want to rush. I'll just prove it to you that by doing so, rupee is appreciating by 5 and dollar is depreciating by 4.76. I'll prove it to you. Then you can write down the next page. I believe everybody is done with this. Do one thing, you write down this first. See, we have got the answer of spot as 70 rupees per dollar, and you have the forward as what we got the answer is 66.66 rupees per dollar. So from this one thing what we understand is that dollar depreciates, and we also understand that rupee appreciates. I have told you depreciation is minus, appreciation will be plus. How do I get minus? If I do 66.66 minus 70 divided by 70, right? And how do I get appreciation? Plus 70 minus 66.66 whole divided by 66.66. So if I do this, I get the answer as minus 4.75% here. And in the other case, I'll get the answer as 5 percentage plus. And this is exactly what the question is saying. Ideally, Yatishwar, yes, you should give a note that and you should solve it as per the correct solution itself. The worst issue is that maybe the answer key, if they give it directly from the RTP, the answer key will have a slightly different answer. You can just give a note that if we assume that the rate of appreciation and depreciation are the same, in that case the solution will be like this. That way you don't leave any stone unturned, right? And SFM, you will have time to write the exam. There is no worries about time shortage. It's more about conceptual clarity. People who have got logic clarity, they can finish the paper in 2.5 hours. It is costing an FR where time becomes a problem. I believe you are done writing this. Now you can write down this in your books. I believe, are you done writing this also, friends? Can I go to the next part? I believe you're all done with this, friends. So we are done with this question. We are done with this, and this. Will your answer differ if Mr. Mummen invests in the bond just before the interest is payable? Tell me, my dear friends, will there be any difference in the answer? The answer is no, because in that case also, your P0 will remain the same. P1, you will get coupon also, you will get the redemption value also. So we'll write down the last requirement. Conclusion. Okay, you can write down the answer will not change. This is for requirement number 5. Requirement number 5 will not change because Mummen will get coupon and redemption value. Hence, no change in solution. Please write down this and finish it off. After this, we can go to the next part. Okay, I believe you are done with this. Can I go to the next part now? We are done with this question also. Let us go to the next question now. GDR, the final tricky question, friends. Once this is done, the remaining problems are all routine. We can do it very quickly and finish it off. Okay, so I'll write down the basic data now. Working note number 1, basic data. Friends, even before we proceed, we need to understand what is a GDR. Conceptually, GDR, the full form is Global Depository Receipts. They are something like an instrument, like a share, which is raised with an underlying asset. And in this case, the underlying asset is normally shares. You can have 1 share, 2 share, 3 share. These shares can be issued at a premium or they can be issued at a discount also. So GDR is basically a fundraising mechanism. And this is accepted worldwide. People can go with GDR, and for this the underlying asset turns out to be shares. To understand this better, we will do a problem. Just quickly write down this in your books. Yes, Aditya, you're right. Infosys has come out with GDR. Arvind, you want me to repeat some sentence? I'm sorry, I'm reading that message now. What sentence you want me to read out? This one? Please write it down. All right. Now please write down this. No, not required, Chitra. You don't need to give any one-liner explanation. This is just for you to understand what exactly is a GDR. All right. Now I'll write down working note number one, basic data. Okay. So now here, Mr. Raghu wants to expand his operation. So he wants some more money. He requires $8.82 million. Okay. Fund required $8.82 million is required. All right, net of issue flotation after everything in his hand, he needs how much? 8.82. All right. How much is the flotation cost that is expected? Flotation cost is 2%. That means how much should be the net issue before flotation cost? That would be 8.82 divided by 98%. So do you get the answer as $9 million? Right? So this much, how did I get this $9 million? 8.82 divided by 98%. This much of money is required and the money is coming in rupees. Expected market price of a share is turning out to be how much? 360 rupees is the market price per share. Each GDR will have two shares. So two share will make one GDR. They are issuing at a 10% discount. Exchange rate is 72 rupees per dollar. So I'll write down first exchange rate 72 rupees per dollar. So what is the issue value that you get in rupees? It would be $9 million into 72. Do I get the answer as 648 million rupees? Everybody clear so far? Now they say they will be using two shares. Each share is having 360 rupees market price, right? So price per GDR, that would be 360 rupees into two shares together into 10% discount. So I'll take it as 90% over here. How much is 360 into 2 into 90 percentage? Do I get the answer as 648 rupees per GDR? From this, can I now find out the number of GDR? The formula would be E divided by F. So you will get the answer as 1 million GDR will be required. Darshana, GDR is not equity share. GDR is a separate instrument which is valued based on equity share. It is a form of a derivative. It's not exactly a derivative, Suraj. It's a form of a derivative. It's a real fundraising equipment in the real market. But the value derives from the underlying asset. Are you all done writing this, friends? Shall I explain the next part to all of you? Fine, friends. I'll explain the other part of it now. 1 million GDR you get. I will do a reverse working so that you get clarity on what I did now. I will just do reverse working, okay? Now, what is the ideal price per GDR less flotation cost? Because flotation cost will have to be paid, right? So it will be 648 minus 2%. Do I get the answer as 635.04? This is the net receipt that I get in my hand, correct? So if I do 635.04 into 1 million GDR, I would get the answer as 635.04 million rupees. All right, 635.04 million rupees divided by what was the exchange rate? 72 rupees per dollar. If you do divided by 72, if you do, you will get 8.82 million dollar. Isn't this exactly the same number that we started off with? Right? Can you write down this in your books now? I believe you're done writing this also, friends. I'll go to the next part now. If you're done with this part, now we'll read the next part. Dividend is expected to be paid at a rate of how much percentage have they told over here? 20%. So let us go and find out the amount of dividend also. I'll write down the next working note. Dividend per GDR. Okay. They have used the word dividend rate. So dividend rate will be on what, friends? It is going to be on the face value. Everybody clear with that? So I'll write down face value per share. I think that's given in the question, right? 100 rupees. So I'll then write down number of share per GDR. How many shares are there per GDR? 2 shares. All right. So total face value per GDR would be 200 rupees. All right. So the dividend amount will be equal to 200 rupees into how much percentage? 20%. Do you get the answer as 40 rupees over here as dividend? Can you write down this in your books now? All right, friends, I believe you're all done writing this part also. So once you get the dividend per GDR, you as a financial consultant are required to compute the number of GDR to be issued and the cost of GDR. I think we have already got the number of GDR as 1 million GDR. We'll now have to find out the cost of GDR. Next working note, cost of GDR. We have learned the formula P0 is equal to D1 divided by KE minus G. So P0 is the price today. How much is the price that you get today? I think we got the answer as 635.04. This should be equal to 40 divided by KE minus the growth. They have told the growth to be 12%. Let us do a backward working now. That would be 40 divided by 635.04 plus 12%. I think I'll get the answer as 18.30%. Can you write down this in your books now? Once this question is done, remaining questions will go fast, all right? Because this is the last one, which is a little tricky. So I just wanted to be a little slow. All right, friends, I believe you're all done. Yeah, Brinda, in SFM, always we take the cash flow. We don't take the face value or the market price or anything. In reality, how much money am I getting in my hand? 635 rupees only. So that is my price today, net of all costs. Am I right? So I should be taking 635. I should not be taking 648. I believe everybody is done writing this. Let's go to the next requirement now. What is your suggestion if the company receives an offer from US bank willing to provide a loan with an interest at 12%? Friends, here he is paying 18%. So loan of 12% ideally is cheaper. So I'll write down the next working note. Proposal of 12% loan. Since 12% is cheaper than 18 point whatever percentage, 18.30 percentage. Okay, company should prefer the bank loan. That is the answer for this question. All right. And they're asking how much will the company save? So I'll write down the next working note. Savings. Now this is pretty easy. Savings will be 18.3% minus 12%. That turns out to be 6.3%. Can you write down and finish it off? We are done with this question also. Darshana is done. Let others also finish writing. In a minute, we'll go to the next one. All right, friends. I believe you're all done writing this. Perfect. So we are done with this question also. Now I think the major heavy problems are over. The remaining questions are all easy problems. All right, so we can do it quickly and we can pack it up. So I'll go a bit faster now. Okay, you all can parallelly write along with me. If by chance you're unable to complete also, don't bother because these are all repeated problems that we are going to do. So I just don't want to waste too much of time on these questions. All right. I hope that's okay with all of you. Yes, Suraj, 18.3 is not investors' expectation. Yes, it's investors' expectation also. And that is ideally the payment that the company has to pay in order to maintain that GDR. Am I right? Fine. Now let's go to this question. Following is the information about a bond. Face value is given, coupon rate is given, terms of maturity is given, yield to maturity is given. All right. They want you to find out the market price of the bond and duration of the bond. Friends, we have already learned that value of a bond is nothing but present value of future cash flows. I would like to take an Excel sheet and do this. Here, cash flow, discount factor, discounted cash flow. All right. So I'll just highlight this in gray. So here they have given life is 7 years and the coupon rate is 7%. I'll put it as year one. And this has to go up to 7 years, right? All right. So all the 7 years, 7% will be 70 rupees. I hope that's correct. All right. Discount factor, we will have to take it as how much? That is the yield. And what is the yield that is given over here? 8%. So here the formula would be 1 divided by 1 plus this. We'll convert this into percentage. Here the formula would be this divided by 1 plus this, and it will go on like this for till the end. Everybody clear? Okay, so in here the formula would be this multiplied by 0.93. Last year you would be getting the principal amount also, that is 1000 rupees. It will be 1070. Here if I sum it up, I'll get the price of the bond, that is 947. Here I can put the weight and I can find out the weighted average duration also. I'll convert this into percentage. Okay. And if I just pull it down, I'll get the entire thing coming in here. And here I can find out the duration. Formula for duration will be year multiplied by weight. If I do this and I just give a sum of this entire thing, I get the duration as 5.73. Right? I'll give you a minute's time. Please write down this or just quickly go through it, after which I'll go to the next part. Aditya, I didn't follow what is 323. Suraj, you can use whichever you want. There is no compulsion that you are supposed to use the formula only. Nothing like that. I believe you are clear with this part. I'll go to the next one now. Okay. So let's read the first requirement, market price of the bond. That is the first requirement. Let me cross check the answer also. It's question number 2, right? One moment, let me just cross check if the solution what we have got is exactly right. Yes, we have got 5.73. They have also got 5.73. So this answer is correct. Nothing wrong with the answer over here. All right. Now I'll go to the next one. They are asking for market price and bond. And if there's an increase in the yield by 35 basis points, what would be the price of the bond? So they're asking for volatility. We already know the formula for volatility. What is the formula for volatility, friends? Volatility, the formula is duration divided by 1 plus yield. So we got the duration as how much over here? 5.73 divided by 1.08 because 8% is the, I'll get the answer as 5.30 years. That is going to, no, not years, 5.30 percentage is the volatility that you get, which means if there is 1% change in yield, price will change by 5.3%. So here they're asking for a 0.335 basis points. So I'll write down if there is 0.35% change in the yield, then what will happen to the price? The price will change by 5.3 into 0.35. 1.855 percentage. All right. So if it goes up by 0.35 percentage, this one will fall down by 1.855. And if it falls down by 0.35%, this one would go up by 1.855 percentage. Are you getting my point? So what is the current price that we have in the Excel sheet? 947.4, right? And here it will be 947.4 plus 1.855 percentage. All right. Aditya, you want a minute? Please write down. I believe you're all done writing this. You want the spreadsheet, Aditya? Please write down. All right, I believe you're all done writing this, friends. Okay, done, perfect. So this one we got the answer as 929. In the RTP, they have done it in a very elaborate manner, but they have also got the same answer. I'll just go and show you. If you take question number 2, look what they have done. Price increasing by 35 basis points. They've got 930.15. We got the answer as 929.82. 99% correct. And we have done it conceptually. They have done it in a very elaborate manner. Okay. And they have got the same answer. Right. So I believe we are done with this question. Shall we go to question number 3 now? Question number 3. Mr. A is having 1 lakh shares of K Limited and the beta is 1.4. I'll quickly write down. Okay, point number A, existing scenario. 1 lakh shares and beta is equal to how much? 1.4. Down they have given LMNO, beta is given and the holding is given. All right. From this, can I find out the overall beta for the suggested portfolio? So I'll write down suggested portfolio. All right. I'll write down beta, weight, beta into weight. So I have 1.2, 0.75, then I have 0.40, 1.40, and the percentage holding is 10%, again 10%, 30%, and what is the last one? 50%. So do I get the answer as 0.12, 0.075? Again, I'll get 0.12. Okay. And the last one would be 0.7. So what's the total I'll get over here? 0.12, 0.075 plus 0.12 plus 0.7. 1.01. Can you write down till here in your books quickly? I believe you are done writing this, friends. Can I go to the next part now? Okay, so once I get this, they have given the RM is given, the RF is also given. You are required to calculate for the present investment and suggested portfolio. What is the return using CAPM? Friends, a very, very simple question. If the market goes up by 2.5%, market goes down by 2.5%, market becomes negative. All right. So I'll just put a table over here, a very, very simple question. Existing, suggested. Okay. In that, I'll write down first one. I'll put the RM as 12 percentage. All right. If the RM is 12 percentage, what will be the formula? RF plus beta into RM minus RF. Sorry, into 12 minus 8. And here the formula would be what? 8 plus, what is the beta? 1.015 into 12 minus 8. Now they say if the market goes up by 2.5% means it will become 14.5%. Goes down means it will come down to 10.5%. The market is giving a minus 2.5% return. Okay, that's all. Nothing great over here. So here the formula will be what? 8 plus 1.4 into 14.5 minus 8. 8 plus 1.4 into 10.5 minus 8. 8 plus 1.4 into minus 2.5 minus 8. Here, all the cases instead of 1.4, the beta will turn out to be how much? 1.015. Can you do this and find out the answers on your own? I'm not wasting my time doing this routine stuff. Lakshmikant, I believe we have given the effect to beta. Brinda, it is 9.5, is it? Okay, yes. What you said is right. 2.5, 12 minus 2.5 will be 9.5. What you said is right. So this one would be 9.5. Thank you for correcting me, Brinda. Somebody put the answers and let me know, okay, what are going to be the answers? All right, do you get the answer as 12.06? I'll just go and show you the solution now, friends. We are doing question number 3, right? Here you have the solution. Are you getting the same number, 12.06? Yes. Then you have 14.6. Yes. 10.52. It's 9.52, right? It's not 10.52. Yes, it's 9.52 and minus 2.66. Excellent. And the other one will be, look, you can just look over here, 13.6, excellent, 17.1, perfect. Perfect, friends. I believe you all are getting the same answer. Let me just cross check this. I'll give you a minute more, then we can go to the next question. Yes, it's 13.6, Aditya. That's exactly what I said. I believe you're all done with this part, friends. Okay. So let's go back to the question and see if something is left to be done over here. If the probability of market giving a negative return is more, please advise Mr. A whether to continue with the existing holding or go by the suggested one. Now tell me, I'll just write down over here, analysis if market is negative. Now tell me, what is the return you got under the existing scenario? You have some return under existing and you have some return in the suggested. You have to help me out here. Let me check it. I think you get the answer as over here you get minus 6.7%, but in the suggested portfolio you get minus 2.66%. So can I not say that suggested portfolio is better? If market is negative, better to go with suggested portfolio. Please write down this and finish it off, and we are done with this question. I believe you are all done writing this also. Can I go to the next part now? We are done with this question. Let us go to question number 4. Another very, very easy problem. Mayuri wants to construct a portfolio with X and Y. Expected return is given, risk is given over here. Down they have given 5 options. 50% in X and Y, 75% in X and 25% in Y, 25, 75, 60, 40, etc. They have given the correlation as 0.16. You are required to calculate the expected return and the risk factor in all the options and tell which is the best from risk point of view, which is the best from returns point of view. Friends, I think the best way to do this is I will put the whole table in Excel. That will it will be easier for me to work it out, right? So I'll put the data that is given over here, X, Y, return of X is given. I'll first start off with returns. You have return for X and you have return for Y, that is 19% is the return of X. And what's the return of Y? 23% is the return of Y. Right? Down they have given the risk data also. I'll just copy down the risk data over here. 14%. And here it is 18%. All right. Down they have given the weights are multiple. They have given the correlation also. I'll just write down the correlation factor over here. How much is that? 0.16 is the correlation. Now they have given multiple combinations. Weight of X is given separately. Weight of Y is given separately. So we have to sit and find out the combined return for each of these combinations, right? So just write down combined return. Okay. Now that depends upon the weight X and you have Y. I'll write down situation number 1. Situation number 1, they have told the weights are going to be 50% and 50%. So how do I find out now? I know the return of X I know the return of Y also. From this, I just have to find out the combined return. Am I right? That will be nothing but the weighted average return. So if this is 50-50, I just copy paste over here 19% and here it will be 23%. My combined return, what will be the formula? Return of X into weight of X plus return of Y into weight of Y. Do I get the answer as 21%, friends? Now all that I have to do is copy paste in a way that I get all the 5 combinations 2, 3, 4, 5. These two things will be the same until here. This formula will also be the same. Only what will change? Weights will change. It will be 75, 25. Then you have 25, 75. Then you have 60, 40. And then you have 35, 65. We got the combined return over here. I'll give you a minute's time, just write this down. After that, we'll write down the combined risk in exactly the same manner. This is weight of X and this one is what? Weight of Y. Friends, I believe you're all done writing this. Now I'll go to the next one. We'll try finding out the combined risk now. I'll copy, paste this whole thing down. We can use a Markowitz method of formula. Okay. So here I'm going to find out the combined risk. That will be a little bit more trickier than what we had earlier. Weight of X is given weight of Y. It will be risk of X now, right? Standard deviation of X, standard deviation of Y. That will be 14 and 18%. All right, that would come, and here combined risk will not be so easy. What we have to do is we have to do X square. I hope you know the formula. X square we'll do, then we will do Y square. Okay, then we will do 2xy and then we will take the total. That will be the combined risk. So this will be nothing but standard deviation of X, weight of X the whole square. So here the formula would be what now? It would be standard deviation of X into weight of X the whole square. whole raised to 2 whole square. Wait, I think we'll put this in whole numbers to get the clear idea. I'll convert these things into numbers. Otherwise, we'll be getting wrong numbers because it's a deviation from mean. Okay. Now it will make better sense. And here also it will be in numbers that we are going to find out. Okay. So the formula would again be standard deviation of x into weight of x the whole square. This whole thing will come like that. This one would be standard deviation of y into weight of y the whole square. Okay, here it will be 2 into 2 into 2 into standard deviation of x into weight of x into standard deviation of y into weight of y into correlation of xy. I think that we got somewhere over here as 0.16. I just block this so that this one can be D3 can be frozen, and I can just paste and forward this forward downside. Combined risk will be nothing but square root of this plus this plus this. So this is going to be your final answer using Markowitz method. Can you write down this also in your books? Darshna, what is 16? I didn't follow. Friends, I believe you are done with this part also. Yeah, Yatishwar, you have learned the formula, right? If you want to do it in a proper formula manner, you can do it here. See, what you can do is you'll just have to write the formula would be 14 into 0.5 the whole square plus what is the other one? 18 into 0.5 the whole square plus 2 into 14 into 18 into 0.5 into 0.5 into, I believe the correlation is 0.16, the whole square root. So this one is what we call it as a square, this one is b square, and this one is what we call it as 2ab. I hope you remember this now. Yes, I think we are done with this part, friends. Can I go to the next one? Okay. So they are asking you to find out the return, the risk, which is a portfolio best from point of view of risk. Now tell me point of view of risk, which is better, lower the better or higher the better, friends? It is lower the better. So which is the least risk over here? This is the best answer. This one is the best answer, 11.91. All right. And the next requirement is from return point of view, the higher the better. Where are you getting the best return? 22. So situation 3 is the best answer over here. So friends, that's it. We are done with this question also. I believe everybody is clear with this part. Okay. So we'll go to the next one now. Mutual funds 5 is done. 6 is a question on call option. A very, very simple question. Let's do this together now. Working note 1, basic data. Mr. P has got a following spread. He has purchased a 1 3-month call option with a premium of 6.5 and exercise price of 110. So I'll write down point number A, current position. All right. It is buy a call at a premium of 6.5. Exercise price is turning out to be how much? 110. And he has bought a 3 months put also. One more thing, what he has done is buy a put. Put is a right to sell at a premium of 10 rupees. Exercise price is how much? 90. So he's got a right to sell at 190 and he's got a right to buy at what price? 110. Everybody clear so far? Now they are asking, it's currently selling at 100. Find out the profit and loss if the price remains at 100, falls at 70, rises to 138. So there are three scenarios that is given over here. I'll go to the next page. If price remains at 100. Friends, we can draw a table which we have learned in class also. S1, E1, you have action, GP, premium, net profit. There are two things we are doing over here. One is buy a call and the other one is buy a put. It is actually a straddle. Am I right? Buy a call and buy a put is a straddle. S1 will remain at 100. E1 will be 110 and 90. So I have a right to buy at 110. Outside market, I can buy for 100. What will I do? Lapse. I have a right to sell at 90. Outside market, I can sell for 100. Again, what will I do? GP will become 0. My premium that I have to pay will be 6.5 here, 10 over here. So my loss will be 6.5, 10. Total loss will turn out to be how much? 16.5. Can you write down till here in your books now? All right, I'll go to the next page now. I believe you are done writing this also, friends. So once you understand price remaining at 100, now the remaining two are very easy. Price falling down to 70. Next, I'll write down price falls to 70. So if the price is falling to 70, again I will have the same two steps coming in. Particulars, we have S1, E1, action, GP, premium, net profit. The first step is buy a call, and the second step is buy a put. So here again the price is now how much? 70, right? So S1 turns out to be 70, whereas my E1 will be 110 and 90. So you have a right to buy at 110. Outside market you can buy at 70. So what will you do? Lapse. Right to sell at 90, outside market 70 you will exercise. So here you make a profit of 20, and the premium you pay will be 6.5, 10. So minus 6.5 plus 10, your net profit will be how much? 3.5. Can you write down this in your books now? Excellent. That's wonderful, Darshana. Last one also, you've got the answer as 11.5. I will do the last one here itself once you are done writing this. I believe you're all done with this part. Now we'll go to the last part. The last part is what? The price becomes 138. So what I'll do is I'll just change those numbers here. This will change and all these numbers would change. So if this becomes 138, you have a right to buy at 110, you will exercise. Okay, so you will get 28 over here minus 6.5, that will give you 22.5. Or will it give you 21.5? Let's confirm. 21.5. And here it will be minus 10. So your net profit will be 11.5. Excellent, Darshana. Let others also finish it. I believe you are all done writing this, friends. So we are done with this question also. Shall we quickly go to the next one? Now, how many questions are left? 7 is left to be done, 8 is done, 9 is done, 10 is also done. 11 is a very simple 12. Okay, so we are having 3, 4 problems to be done, right? Let's quickly pack up, friends. We'll do this question first. The BSE Sensex problem, right? I'll write down the basic data. Working note number 1, basic data. So here they have given the BSE index is 25,000. BSE index is which market, friends? It is the spot market. There they have given the value as 25,000 and they have given the value of the portfolio as how much? 50 lakh 50,000. All right. RF is given and dividend on yield is given. RF 9%. Darshna 138 is S1. Yes, that is S1. That is the price on expiry, right? Yes, that is S1 itself. Yield is given as 6% and beta is given as 1.5. We assume that a future contract on BSE index with a 4-month maturity is used to hedge over a value of 3 months. So duration of future is 4 months. Is turning out to be 4 months. All right. But portfolio is hedged for a duration of only spot market is only for how many months? It is only for 3 months. Okay. One contract future is for delivery 50 times the index. So we have the multiple also over here. How much is the multiple that is told? It is told as 50 times. All right. Can you write down till here in your books and understand this question thoroughly? Friends, I believe you are done writing this. Okay. Now I'll tell you what is the main concern over here is that I'll just draw a chart and explain to you. Suppose today is January 1st. Then I will have Jan 31st. We will have Feb 28th, March 31st, and then you have April 30th. Okay. On Jan 1st, my future contract is going to have how many months maturity? It is going to have 4 months maturity. That means it will expire on what date? My future contract will expire on April 30th. Always for future, there will be an expiry date. For example, I can show you in Money Control website also. Just take this website and take any particular future. Let me take Reliance for time being. If I click on Reliance, you see futures over here. If I click on futures over here, they will show some dates. 28th April is there. 26th May, 30th June. So it is available for some expiry date. Same way in this question, The future is expiring on what date? April 30th is the date on which future is expiring. On this date, the BSE spot value is turning out to be how much? BSE spot value is turning out to be 25,000. At this point, I want to find out what will be the BSE future value. Now to find out BSE future value, we have learnt a formula in textbook. F0 is equal to S0 into E raised to RT. Or in this case, the formula would be F0 is equal to S0 into E raised to R minus Y into T. So future price will be 25,000 is the spot price into E raised to, what is the rate that is given in the question? 9% minus 6%. 0.09 minus 0.06 into duration will be for how many months now? It is going to be for 4 months. So if you do this into 4 by 12, I will get the answer as F0 is equal to 25,000 into E raised to 0.01. E raised to 0.01 is nothing but 1.01 plus 0.01 square divided by 2. 0.01 into 0.01 divided by 2 plus 1.01. That will be 1.01005. So here the formula would be 25,000 into 1.01005. Ideally, the answer should be 25,251.25. But your textbooks have done it in a simple compounding manner and they have got an approximately similar answer. Can you write down till here in your books for time being? Hold on. I just give you a note here also. RTP uses simple compounding. Ideally, it should be continuous compounding only. If you use simple compounding, your answer is going to be 25,250. Little bit of deviation is there from the correct answer that we have got over here. Please write down this in your books now. Friends, if you need a break, let me know, okay? Maybe we'll need another 30 to 45 minutes to complete it. I think only 2 more problems are left to be done, right? Are you all done writing this? Darshana, you have a doubt. We will deduct yield from R. Yes, Darshana, you can do it by deducting the dividend amount also, but you are simply complicating the process. But yes, if you remember what we did in the chapter of futures, initial 4 questions, we have deducted the dividend from the yield also, you get the same answer, or you do it in this method also, you get the same answer. I have reconciled it over there. I believe you are done drawing this, friends. Yes, Darshana, you can use that formula, nothing wrong. Yes, in the exam you can do it using any one of the methods, Darshana, nothing wrong in that. Are you all done writing, friends? I believe everybody is done with this part. I'm going to the next part. Fine. All right, friends. I believe everybody is clear so far. So I think we have got the Bse future price over here. That is 25,250. This is having 4 months maturity, correct? So when will this expire? This will expire here. Here means at this point it will expire. Everybody clear so far? But now in the spot market, I'm entering into a contract for how many months duration? 3 months. So in the spot market, it will get over at what point? It will get expired at this point of time. I'll just go and read the remaining part of the question. Okay. Gain on the short futures position if the index turns out to be 22,500 in 3 months. So I'll write down over here. BSE over here turns out to be 22,500. So in that case, can I find out what will be the BSE future over here? Okay. Now everybody interact with me. January, I have to enter into 4 month forward to bring it to 30th April. Now to cancel that contract on March 31st, I should be going with how many months forward? Come on, think and tell me. From here, I should take it this much forward. So can I say, isn't that a 1 month forward contract? So both will come at one point and it will get nullified. Are you understanding what I'm trying to say? So now I need to find out the BSE futures value on March 31st, which is having a 1 month duration. I'll write down the next working note. Okay. BSE future value on March 31st, which has 1 month duration. So when you talk about 1 month duration, the formula over here would be what now? Future price will be equal to S0 into E raised to R minus Y into T. So the future price will be 22,500 into E raised to 9 minus 6 into 1 by 12 now. So that is 3 divided by 12. So that will be F0 is equal to 22,500 into e raised to 0.25. I think it will be 0.025, right? 0.03 divided by 12, 0.025. 0.0025. So e raised to 0.0025 will be 1.0025 plus 0.0025 square divided by 2. Do I get the answer as 1.002503.125? Beautiful. So this multiplied by 22,500 should give me 22,556. 22,556.32. This should be the answer. 22,556.25. In your RTP, they have used simple compounding. Little difference. So I'll just write down that also. RTP uses simple compounding, and they have got the answer as 22,556.25. Slight deviation. Can you write down this in your books now? Yes, Brinda, we can go for the solution that I have given you also. But I just want my final answer to tally with the RTP answer. Otherwise, you'll sit and reconcile. I have given you this answer. There you're getting that answer, etc. I believe you're all done writing this also. So I just go and write down 22,556.25. That is the value we get over here. One moment. Okay, I'll just write down 22,556.25. Just update the diagram also now. Okay, I believe you're done with the diagram. So now they're asking for the gain in the short futures position, right? So I'll write down over here the next working note, gain in the short future position. Here I'll write down the current position. Okay, wait. hold on. But to find out the gain, we need to first find out the value to hedge. We have not yet found out the value to hedge. Let me start with that part. I'll write down the next working note heading. Value to be hedged. Okay, for this we have learnt a formula S0 into beta into 100 percentage, right? So what is the total value in the spot market? 50 lakh 50,000 into 1.5 is the beta into 100 percentage, right? So if I do this, I'll get the answer as 75 lakh 75,000. This is the value to be hedged in the futures. But I need to find out the contract size also. So the value of one contract, I think we got the answer as how much? 25,250, correct? Multiplied by what is the multiples that is given in the question? 50 times into 50 times. So 25,250 is the value of one. We are dealing in a bundle of 50, so that will be 12 lakh 62,500. So from this I can find out the number of contracts to sell today. That would be 75 lakh 75,000 divided by 12 lakh 62,500. You get the answer as how many contracts? 6 contracts. Can you write down this in your books now? I believe you are all done writing this, friends. So once you get the 6 contracts, now I will write down the final working note. Gain on short position. Okay, I'll write down position on January 1st. On January 1st, what am I doing? I'm selling 6 contracts. Correct? 6 contracts I'm selling at a price of 25,250 per contract into the multiple is how many times? 50 times. If you do this, you will get the answer as 75 lakh 75,000. Now, action to cancel on March 31st. What will you do on March 31st now? You will buy 6 contracts. But on that date, the price is not 25,250, it is 22,556.25. 22,556.25 into 50 times. So let's check out what is the value you get over here. 67, 66, 875. So now tell me, what is the gain that you make over here? You make a gain of 8,08,125 and you're done with this question. Can you write down this in your books and finish it off? I believe you are all done writing this, friends. So we are done with this question also. All right. So we are done with a pretty complicated problem on futures, but this is the best question that is available. All right. So we are done with 8, we are done with 9, done with 10. 11 is a pretty easy theoretical problem. Just read through this. He has taken a floating loan at 40 lakhs. Interest is 8.5% to be paid every year on 31st March. Duration is 4 years. Suppose in the month of October, the central bank releases the 4 projections. The rates are going to go up 8.75, 10, 10.5, 7.75. How a borrower can hedge his risk by increase in the interest rate and peg his interest at 8.5%. Come on, friends, think and tell me what is the instrument you can use if the interest rate is going up. Just think of the depressed person. If you have attended my class, I think it was depressed Sumaya. Rate keeps on going up. How do you plug? Come on, tell me. I'll wait for your answer. Excellent, Suraj. Cap floor. Which one should you take? Cap or should you take floor? Tell me the precise answer. Cap. Excellent. The right answer is you should take a cap. And then once you take a cap, if it becomes 8.75, you end up paying only how much? You end up paying only 8%. If it goes up to 10, you end up paying 8. If it goes up to 10.5, you end up paying 8. If it comes down to 7.75, you end up paying only 7.75. And they have given you the assume the premium negotiated by both the parties is 0.75% to be paid on 1st October 2012, and the actual rate of interest irrespective of due dates happens to be these. Show how the settlement will happen. Friends, a very, very simple problem. Let's just write down. Okay. They have given the interest rate that is 10.2%, 11.5, 9.25 and 8.25. What is the cap rate we were talking about? 8.5, right? 8.5, 8.5, 8.5 and 8.5. So what is the gain that you make in the first case? 1.7%. Here you will make a gain of around 3%. Next one will be 0.75%. Here you don't make any gain at all. You end up paying only 8.25%. What is the premium you have to pay? 0.75, right? That you have to pay irrespective of whatever is happening. So here you will get 0.95%, 2.25%, 0 minus 0.75%. Can you write down this in your books now and finish it off? All right, friends, I believe you are done with this part also. Excellent. So friends, next rest you can just read through it on your own. It's a very simple problem. You can do it on your own. Now there's a question on economic value added. I'll write down the next concept heading. Economic value added. This is something what I normally take in my SCMP classes in a very elaborate manner. There's a chapter called as performance measurement in which we cover this in depth. But questions of EVA, they sometimes come in FR, They sometimes come in SFM, they come everywhere. But off late, it is more possible to come in SEMPE because of the volume of questions and the beauty of questions. You have some three amazing questions in your SEMPE study material, friends, on economic value added that will take your mind off. Amazing problems. Here we'll do simple problems only because in SFM you don't get that kind of heavy problems. I'll just give you the formula first. EVA is equal to whatever is your earnings minus whatever is your opening capital or the investment that you have made into WACC. For example, suppose your earnings is 12 lakhs minus your investment is 100 lakhs and you're expecting 10 percentage. So 12 lakh is the return you got, but you're expecting only 10 lakhs. You're getting the answer as plus 2 lakhs. If you get plus 2 lakhs, you are happy. This is your actual return, and this turns out to be your expected return. Just write down this, after which we will do the problem on EVA. I believe you're all done with this. Now let's do this problem. I'll write down the basic data, working note 1. Working note 1, basic data. All right, now Herbal Box is a small but profitable producer of beauty cosmetics using plant aloe vera. High-tech business has earned an average earnings of 18.5 lakhs. So I'll write down point number A. You have got the earnings after tax. How much is that? 18.50 lakhs. All right. He has includes in assets 50 lakhs in property, plant 25 lakhs in working capital. His patent not shown in the books is okay. That all that is etc. etc. He has run offered 50 lakhs for patent rights. Assets includes 50 lakhs and working capital. So what is the total assets that he is actually having? Tangible and intangible. 50 plus 50 plus 25. Do you get the answer as 125 lakhs? All right. And what is the WACC they have told in the question? 14%. It's a very, very simple question, friends. Once you come to HCMPE and you see the questions there, your life will become miserable. These are all baby questions in SFM. EVA, the answer would be 18.5 lakh minus 125 lakh into 14 percentage. That will be 18.5 minus 17.5. Do you get the answer as plus 1 lakh? So you should be happy. The EVA is positive means I get more return than expected. We are done with this question also, and we have only one question left to be done. I believe you are done writing this. So we can go to the final problem, friends, and finish off with this RTP. Excellent. Let's go to the final problem. This question is very, very simple. If you have attended my class, you must be remembering a problem called as mark limited, mask limited. Exactly the same thing. In fact, that question had more requirements than what this question has. So let's do this quickly and finish it off with this also. All right. I just want B wants to acquire S. Swap ratio is 2 is to 3. 2 shares for every 3 shares of S Limited. So B will give less number of shares. He will give only 2 of his shares for 3 shares of S. So B is a powerful company. So I'll write down particulars. Yes, that's not the first problem. B Limited. And then you have S Limited. All right. They have given the profit after tax 21 lakh, 4 lakh 50,000. Okay, they have given the number of shares over here. 6 lakh shares are there. 3 lakh 50,000 shares are there. So sorry, 1 lakh 80,000. From this, we can find out the EPS, but it's already given in the question. 3.5, 2.5. I believe they have also given the PE ratio, that is 10 and 7. So from this, you can find out the MPS also. You would get the number as 35, and 2.5 into 7 will be how much? 17.50. All right. And price quoting per share before the merger of announcement. Yeah, that is MPS. That's exactly what we found out. We found out using the formula C into D, and that's given over here. We need to also find out one more thing, earnings before merger. Because once they get married, the earnings will get added up. So 6 lakh into 3.5 will give you 21 lakhs. 1 lakh 80,000 into 2.5 will give you 4.50 lakhs. So this plus 21 will give you the answer as 25.5 is the total earnings after merger. Write down this in your books now. I believe you are done with this part, friends. This is a basic data. Now we'll read. Number of equity shares to be issued by B Limited for acquisition of S Limited. Friends, this is very simple. We'll write down the next working note heading. Exchange ratio. All right. Point number A, I will write down. Exchange ratio is 2 is to 3, or we can also denote it as what? 2 by 3, as I have told you. 2 shares for every 3 shares. Number of shares in the holding company, which is a holding company B Limited. What is the number of shares in B Limited? 21 lakhs? No, that's the earnings. Shares is how much? 6 lakhs. Now I'll write down number of shares issued to, which is the second company, S Limited shareholders. That would be 1,80,000 shares. For every 3 shares, only 2 will be issued, right? So I think you'll get the answer as 1,20,000. So we can find out the total number of shares after merger would turn out to be 6 lakh plus 1.2 lakh. That turns out to be 7.2 lakh shares. Can you write down this in your books now? I believe you're done writing this also, friends. So once you're done with this, then they're asking what is the EPS after acquisition? A very simple question. Next question will be EPS after merger, right? So when you talk about EPS after merger, the formula would be earnings after merger, which we already got the number as 25,50,000 divided by number of shares after merger, that is 7,20,000. 25.5 divided by 7.2 would get the answer as 3.54 rupees per share. Can you write down this? All right, friends. I believe you are all done writing this. Next one is determine the equivalent earnings of S Limited and calculate the per share gain or loss. Wonderful. Friends, we have already learned this concept also. Equivalent EPS. This is for comparison purpose. And the formula would be post-merger EPS into the exchange ratio. So that would be 3.54 into 2 by 3. I'll get the answer as 2.36 rupees per share is the earnings that he gets after merger. But before merger, he had an EPS of how much? 2.5. Okay, so the loss will be now he's getting 2.3. Earlier he was getting 2.5. So his loss will turn out to be how much? 0.10 rupees per share. I will prove this to you with a detailed table also. For time being, just write it down like this. I will give it to you with the whole table. I believe you are all done writing this. I'll go to the next working note and give you gain or loss based on earnings. I'm not sure if the RTP is doing this, but logic point of view, you should know. particulars. We have two companies, B Limited and S Limited. So we normally do it how? Earnings after merger divided by what? Earnings before merger. Earnings before merger we found out in the first table, 21 lakh and 4 lakh 50,000. We already found out that earlier. After merger we can use the formula. How many shares are there? 6 lakh shares are there. So here it will be 6 lakh shares into the new EPS is 3.54. Whereas for the second one, the new number of shares is 1 lakh 20. It will be 1 lakh 20,000 shares into 3.54. You'll get the answer as 21 lakh 24,000. And here we'll get 4 lakh 24,800 is what you get over here. Okay. So 21 lakh 24,000 divided by 21 lakh. You make a gain of 24,000 over here. 4 lakh 24,800 minus 4 lakh 50. You make a loss of 25,200 over here. Friends, ideally this should be the same. It is just a rounding off because the precise EPS is not 3.54. It must be 3.54 something something something. So if I take 25,200 of loss divided by how many shares are there? 1 lakh 80,000 shares were there before merger, right? Divided by 1 lakh 80,000 if you do, you will get the answer as 0.14 rupees per share. Is that the same answer what you got over here, friends? I will just highlight that for your convenience. Here we got 0.14 and that's exactly the same answer you get over here. I believe you are all done writing this also, friends. Can I go to the next part now? All right. So we got the EPS of B Limited after acquisition. We got the equivalent earnings also is over. What is the expected market price? Okay, so that's the next question. I'll write down the next working note. Sorry. I'll write down the next working note. Expected MPS after merger. Expected MPS after merger. That is nothing but post-merger EPS into PE ratio. Post-merger EPS multiplied by the PE ratio. So how much is the post-merger EPS that you get over here? 3.54 into the PE ratio is how much? PE ratio is turning out to be 10 times. So I'll get the answer as 35.4 rupees per share. What is 35.41 and 24.79, Darshana? I I didn't follow the second part. The next requirement, I'll do it here itself. The next requirement is market value of the merged firm. Okay, so how do you find out the market value of merged firm? This into 7,20,000 shares are outstanding after merger, right? You get the answer as 254 lakh 88,000. Can you write down this and finish it off? I believe you are done with this part also. Can I go to the next one now? I think we got the answer of this one. We got the answer of this one. Last question is slightly different from the questions that we have done in the textbook. So mark this last requirement as very, very important. All right. After the announcement of merger, the price of S Limited is going up by 10% on the BSE. An investor having 10,000 shares of S is having another investment opportunity which is giving a yield of 14%. He is seeking your advice whether he needs to offload the shares in the market or should he accept the shares. So friends, I'll write down the next working note heading. Investor point of view, he has got two options. Okay. Option one is to continue. Option two is to offload. If he offloads, he will get how much percent return? He will get 14% return. If he continues, let us find out how much he will get in S. Friends, post merger, how much is the equivalent EPS of S that we found out? Did we get the answer as 2.36? This is the EPS, all right? How much is the market price per share? Let us find out. As of now, what is the market price per share that is told over here? 17.5. But the question says this will go up by how much? 10%. So it will be 17.50 plus 10%. That turns out to be 19.25 rupees per share. All right. So this is the return that I get and this is the investment that I have to make. So if I look at this, how much is the return that I get in percentage over here? 2.36 divided by 19.25. Do I get the answer as 12.25 percentage? So which is better, friends? Option 1 is better or option 2 is better? Option 2 is better, hence I should offload. Can you write down this and finish it off, friends? So we are done with this also and we are done with the entire RTP. Friends, I believe you are done with this part. So with this part, we are done with 100% of RTP May 22, friends. So this has a very good chance of questions coming in the exam. Let me summarize a few good areas for you to mark. One is this one, after announcement of merger. Okay, this one you have to mark. Let me go up. EVA, easy question, but they keep asking that in the exam. Then you have to go through GDR. GDR is a good question. Mark it as important. Question 9 and 8. International finance, all the three beautiful questions they have given over here. Okay, these are all okay, manageable. Dividend equalization, another important question from exam point of view. And the most important is question number 1, stock lending scheme, something which was never asked so far, not there in the books, but it has come now. Okay, Science Riksha, you want me to give you an advice upon how to study the theory part? I'm coming to that part now, Riksha. Manasa, MTP, if you ask me any revision to be done, I would say that the more you do, the better. See, what happens is MTP is normally questions from the previous practice manuals or from the RTPs only. Conceptually, I don't see anything new or different coming in NTP. But if you have time, well and good, keep on doing it. The more you do, the better for you. Got it? What I'm going to share with you right now is the minimum that you should be covering, at least so that you can cover 100% concepts. All right. Friends, just the way we did SFM today, next Saturday I will be doing SCMPE also. So with that, both SFM, SCMPE, RTP will be thoroughly covered. Now I will come to the plan for SFM. Okay. SFM, I can break it up into three parts. You have theory, you have concepts, and you have problems to be done. What is the most important thing is the concepts, friends. Once your logic is clear, then trust me, SFM exam becomes very, very easy. You have theory coming from 12 marks to 20 marks in the examination. For this theory, normally what they ask is from the past theory, exam questions, or from the study material. I have already covered the past study material theory part in my regular classes, and I believe I have shared the PPTs also with all of you. Apart from that, also try going through the past exam theory. Now, the past exam theory is available in my website. You can just visit my website over here, tarunjagdish.com. Friends, the whole website has been revamped recently. I hope I will be able to find it. I think it's with the notes. I think it's given along with the notes. Hold on. Yes, SFM notes. Taking to a different place, friends. Hold on. I don't think it's here. It's in Google Drive. I'll share the Google Drive link with anybody who requires it. I'll just take the Google Drive and check. I believe it's here somewhere. I'll share it in the YouTube page right now. It should be somewhere over here. Exclusive subscriber material. No. Live classes. There are some sessions of the live classes. I'll check that, friends. Ideally, there was a Google sheet in which all the folders were available. SFM demo live, SFM promo, SEMP May 22, live class, live classes. SFM promo, not system. I'll check that and get back to you, friends. I'll share it in my Telegram channel. Just do one thing, subscribe to my Telegram channel or just WhatsApp me on my number. It's there on my website. Where exactly it is, the Abhilash has revamped the whole website. I'm not able to find it. It's supposed to come here, right? Suraj, I'm not able to click here and get it. It's coming to a very different place altogether. Or if you know it somewhere else, please let me know, okay? Just do one thing, you can just subscribe to my Telegram channel. Just go to Telegram and search for CA Tarun Jagdish. You can subscribe to my Telegram channel or you can just WhatsApp me on my number. This is only for WhatsApp purpose I use this number. I'll share it with you and I'll update the website link. Since the website has got completely revamped, that link has just been missed out somewhere is what I believe. Or is it there in the live class also? The notes are not seen here. Is it there in classroom? No, it's not here in classroom also. Fine, I'll arrange that for you. Top right corner, it's available. Notes, yes, there is a part called notes here. Let me click here and see. Yes, exactly. It's there here. SFM notes. Correct. Just have to click on SFM notes. Here, this is all workbooks. You get theory and solutions. Here, I've got some more theory, which is the past examination questions, which is available over here. You can always use this theory also. I'll show you again how this actually works. You have to just click on notes. Thank you, Suraj, for helping me out. I'm myself not familiar with my recent website. You have to click on notes. Once you get into the notes, you have AMA notes, that's not relevant anymore. SCMPE notes are there, SFM notes are there. Click on SFM notes. Inside SFM notes, you've got theory and solution. Everybody clear with that? All right. Thank you, Darshana. I think I've got it now. So this is how you can always view my content. Or if you have any doubts, you can always WhatsApp me here or you can follow me on my Telegram channel also. Telegram, just search CA Tarun Jagdish. You will be able to reach me. All right. So now, as far as the exams are concerned, to score maximum marks, this is the area, according to me. In fact, people who are clear with the concepts, for them, exams have been easy in the past and even now. So I request all of you to focus on conceptual clarity because once the logic is clear, at least you'll be able to do a 90% of the problem clearly. And then you should go for problem solving. For many of you who have not attended my class, you can attend to this 25-hour of free lecture that will help you a lot in scoring good marks. In fact, many people have scored a 50 plus by just attending the 25 hours of crash material. Come to my website, click on classroom. Once you click here, there should be an SFM crash 25-hour marathon should be there somewhere. Yes, this one, SFM 25-hour marathon. If you come here and go to the videos, okay, it's not in the videos. Is it in the live class? Yes, it's here in the videos column. You have some 11 sessions, session 1 to session 11. 11 sessions each of 3 hours each or around 2.5 hours each. Around 25-26 hours, this entire thing gets covered up. In this 25 hours, I'm covering maximum concepts and one tough problem along with the concept. So in minimum time, you can actually cover maximum amount of area. If you are already my regular student, you have attended my regular classes, many of the problems will be familiar to you because whatever I do in the regular, if I do 10 questions, in the crash, I'll be doing 1 or 2 problems. But it will be a quick concept revision for all of you also. So you can always go through this in 25 hours. You can cover the concept and the problem part. This will be more helpful to the regular students, but it will be very much helpful to the non-students also. Everybody clear? And theory, focus on the PPT. I will do one thing. I'll create a PPT content on my class and I'll share it with all of you. Plus, you can also go through the already theory that is available in the notes that is being provided in the website. Okay. Darshana, can we use it before the exam? Yes, Darshana, you can use it definitely before the exam because that will give you a very quick grasp on the entire thing. In the class, you must have spent around 120 or 130 hours. This one would be 25 hours. Quick, but it will cover 90% of the area in the minimum time possible. So friends, mainly as far as SFM is concerned, it is about concept. Keep that in your mind. If you really understand why you're doing what, then the subject becomes very, very easy. And when you do the studying also, always focus on easy to tough. Always go from easy to tough approach. I will mention the easy chapters that you should learn. Then you should go to the average chapters, and only then you should go to the tough chapters. Why I have categorized like this is because easy chapters you get more marks per hour that you study. So every 1 hour you invest, you start scoring more marks. Here you make less marks for every 1 hour that you invest. All right. Here comes the basic chapters like bond valuation. Okay, then you have dividend policy. Okay, then you have mutual funds. Which are the other chapters here? Dividend policy, risk analysis, not there anymore. Dividend policy, security analysis. Okay, in your textbook, you will not have a terminology called as bond valuation or dividend policy. It will be called as security valuation. Yes, and one more chapter, friends. 1 minute, I'll write down on top. International capital budgeting, or I will call it as different types of capital budgeting. Here you will have international, you will have inflation capital budgeting, and you will have bond refunding. Okay, these areas, less time you spend, you get maximum marks in this area. All right, and security analysis, I have done hypothesis, everything, all these small areas. The moment you cover this, this should come for around, if I'm not wrong, 40 to 50% marks. Average will come for around another 30% marks, and the tough will be only a 20% marks. Average, there are two chapters that I would like you to focus on: portfolio and mergers valuations. All right. Then you go to the tough area, that is international finance and derivatives, that is forward and futures options. Friends, ideally, if you are my regular student, my book for these three is sufficient. Beyond this, to torture, if they put one question, that will be a very tough question and nobody will be able to attempt. Or give more time now. One day before the exam, my workbook of these three chapters are more than sufficient because we cover everything conceptually, and maybe there will be a little twist up or down which can be handled if you have the real correct logic of, what is bid, what is asked, what is the cross rate, or basically what is the concept of what you're doing. Can you write down this in your books now? Arvind, I'm not giving any advice that attend 25 hours and you will surely pass. I cannot tell like that. There are past students who have messaged me after the results have come stating that I didn't have time. I only went through your 25 hours lectures and I've scored 55. I've scored 45. I've scored 60. Some people have also told 60. I'm not very sure whether the 25 hours should be enough for that. In the past, few students have messaged me in this manner. But ideally, the best thing would be to go by the detailed, elaborate method. But now that exams are nearing, and some students had messaged me that they are running short of time, you don't have much time to study, and you just need to somehow complete and go forward. For those students, in the last resort, this is the best way out because in minimum time, I am covering maximum marks. Suraj, you've got 2 days leave this time. That's good. In the 2 days leave, you can go in a much more elaborate manner, but go in this order. Easy part, you do it first because easy ones you'll remember even later. Tough ones you do nearer to the exam so that you remember it in the exam and you can put it in the examination hall also. Now, friends, tell me if you have any other doubts that you want me to clarify for you, let me know so I'll clarify that also. With that, we can pack up our RTP revision session. Darshana, the tough questions will come if they want to torture you. Tough ones normally come from the area of international finance only. International finance or options. I believe you're all done, or maybe you're still writing this. I'll wait for you to respond. Then I'll just share with you a few more tips about how you can study for the exam, how you can keep your mindset with which we can pack up our session. I believe you're all done writing this, friends. I'll go to the next part. Friends, now from exam point of view, today is April 15th. Your exams are hardly 15 to 20 days away from now, or maybe a little more than that. These final days are very, very crucial. These final days, what we end up doing is we make a lot of mistakes. And these mistakes cost us a lot, heavy lot. One thing, time being less, we try studying more. Okay, that is a wrong theory. Don't think that if I try studying too much hard now, that is going to really result for the marks that you're going to get in the examination. What really matters for your examination is if your exams are happening in May 2022 and right now we are talking about April 15, okay, many of you have been studying hard from the last many years, maybe from April 2021 till date. All right, this effort accounts for 80% of the marks that you will score, and this effort over here accounts for only 20% of the marks. What matters the most from here till the examination date is to keep your cool. The problem is we cannot keep our cool. We get stressed out and we feel like sleeping less, studying more, burning our eyes out. You get too much tired, then take extreme rest, and then again you wake up and then you get stressed out that oh God, we got less time to study, and then you go and study again. Please understand, you are a human being. You need to put some commas and some full stops in your life, without which, if you keep on running non-stop, you will burn out. The most important thing right now is consistency. A consistent life that you will follow today, tomorrow, day after tomorrow, which you can follow even during the examination time, and you can go forward. You have 2 days time for your SFM exam. Is that a good thing or a bad thing? I would say getting 2 days, you get good time to prepare, but it becomes more like a test cricket. If you have a 1 day leave, it is like an ODI, and if you have no leave at all, it is like an IPL, T20. Friends, my exam, I did not have even a single day leave for the SFM examination when I wrote in May 2010. At that time, there was not even a single day's gap. Still, paper was easy for me. That exam's results got withheld. I results didn't come out. There were some complications involved. November 2010, when I wrote the exam, there was 1 day leave, but still the paper was equally easy for me. So the moral of the story over here is that whether you get this 1 day leave, 2 days leave, or 0 day leave doesn't matter. What matters is the in-depth preparation that you have done from the beginning till the examination date. Always keep that one rule in your mind. What matters the most right now is to give yourself good sleep, give yourself good food, give yourself a good routine, and give yourself a good study time. A strong routine that you should follow every day consistently from today till the examination date without any failure in between. I will share with you my routine, what I used to follow, and let's see if you can follow the same thing or you can modify it according to your own convenience. My routine was I used to sleep every day night by sharp 9:30 p.m. I used to wake up every day morning at 4:30 a.m. So this used to give me a sound 7 hours sleep at night. Every day morning 4:30 I used to get up. 5 o'clock to 7 o'clock used to be my session one. All right. 7 o'clock I used to sit and study till this time. 7 o'clock to 8:30 was my session 2. I didn't take a break over here, but the difference was I used to walk in my terrace and study. So this used to be normally a theory session. All right. 8:30 to 9 used to be my breakfast break. 9 o'clock to 11 o'clock used to be my session 3. Every day, 11 o'clock to 11:15, I used to take a power nap every day, same time. And then 11:15 to 12 o'clock was the time that I used to do SFM. You can study whatever you want. I'm just calling it as sessions over here. This would be session number 4, right? Yeah. Session number 4. And then 12 to 1:30 used to be session number 5. I used to do direct tax at this time, DT. You can do whatever you want. For me, this was SFM. Then I used to take a lunch break from 1:30 to 2 every day. And every day from 2 p.m. to 5 p.m., I used to sit in one place and I used to write exams of the 4 practical paper. It could be FR, it could be SFM, it could be SCMP, which was AMA at that point of time, or it could be DT. So 3 hours non-stop sitting in one place. I wrote exams for 1 whole month. The advantage what I got by doing this was when I went to the examination hall, 2 o'clock automatically my brain was ready to write the exam. And that gives you an amazing leading advantage, friends, because when you start, if others are starting slow, you get a starting advantage and you get a 3 hours of concentrated writing time and you have experience in that. You can easily score 5 marks more per paper, and that makes a huge difference when you talk about the examination. And then I used to take a break. I used to have something after 5 o'clock, and the next session I used to have from 6 p.m. to 7:30 p.m. every day. It used to be IDT for me, and you could do whatever you want. 7:30 to 8 p.m. used to be my running time. Intense running I used to do, followed by my dinner, which would have some hot chocolate milk and something to eat. And then I would do my last session from 8:30 to 9:30, which after which I will go and sleep. So this way I used to get around 7 hours and 15 minutes of sleep every day, including the days of my examination. I maintained this routine on the study leave time, and I did the same routine even during the examination time. That made a huge difference, friends. Only one exam I broke my own routine, direct tax. That exam I was too worried. I thought, let me not go for running and I will sleep for 6 hours. That exam, direct tax, I scored 42 out of 100. Somehow I passed. Okay, that gave me a huge lesson. I shouldn't have broken my routine on that day also, because it really doesn't matter breaking a routine and taking away the 30 minutes of running time which was helping me to rejuvenate. Suddenly I lost the rhythm. So friends, it's very, very important that you keep a stable routine. This is my routine. You don't need to follow this. You can follow any other routine you want, but give yourself good sleep, minimum 7 hours of sleep, good food at the right time. If you're eating breakfast at 8 o'clock, eat every day at 8 o'clock, because it will help you with your health also. Good routine, good study time, good exercise. Maybe I forgot to mention that over here. This is what is important right now, rather than stressing, because it doesn't matter. Even if you stress, ultimately, if you have not studied something, you have not studied it. You cannot go back and change it. Am I right? So stop worrying about the future and do what is there in your control. That is the only thing what you can do, and that is the only thing that can help you from here till the examination time. I hope everybody is clear with this point, friends. If you have any other doubts, please ask me. If no other doubts, we'll back up with this. Ram, we have the YouTube revision lectures of the same thing that is there in the text in the tj.com. You can just go to the playlist and do it. SFM, there are not much changes, so I don't need to take revision lectures every 6 months. Whatever I have taken concludes, or it contains all the important questions, plus the RTP what I have done now will cover everything. Darshna, you are asking me how to Chitra, you're not able to view the marathon, just ask for permission. I will give you access, or just message me. I'll add you all to the batch. Darshana, formulas, only way to remember is with the logic. Every formula that you have taken in my class, I have given the entire logic in writing. Focus on the logic, formula will come back to you automatically. Chitra, I'll give you access. I'll give you permission. Just hold on. I can give it to you right away now. Chitra, I've given you access. Just confirm and cross check. You can view the crash lecture. Just have to WhatsApp me. I will give you all access. All right, friends. So let's not waste any further time. All the very best for your exams. Study well, perform well, do well. All right. Any help you need, you have my WhatsApp number. You can always message me and I will be there to support you. All the very best. If you are writing group 2 also, SCMP, RTP revision will happen in the same manner next Saturday. See you in that case, or else study well and get your best. Give in your best and live life your style. Take care, friends. Have a nice time ahead. Thank you.